This problem asks us to calculate outside basis for Connie and Betsy in a partnership. So they give us some information about what they contribute as well as what happens to the partnership throughout the year so that we can calculate the basis. So it says that they contribute property to form double chi partnership. Connie contributes cash, so I'll just label these items and then we'll talk about whether or not they make things increase or decrease and by which value that we'll choose. So cash is always just plain cash. In other words, the fair market value and the basis is the same. Betsy contributes building and land with an adjusted basis and fair market value of $340,000. So we would choose, if we were given a choice, her basis in it, but they're the same, so that's good. So that's $340,000 for Betsy. Subject to a liability of $140,000. So this means that the partnership assumes that liability, and so she doesn't get the benefit of the liability that she gave up. So we're just going to take out $140,000, and we're going to call that, that says Betsy, that's supposed to say building. Liability assumed by partnership. We're going to make that so that we can read it all more easily. Not like that. Okay. All right, so next what we have here is the fact that we need to go ahead and take care of that liability that got assumed. So what you need to know is that for any liability that is held by the partnership, the people that are ultimately responsible for that are the partners. These happen to be equal partners. So anytime they're responsible for a partnership's liability, their basis goes up. So we're going to give Connie and Betsy equal parts of that $140,000, I should say. All right, so let's give them partners' share of liability. All right, so Connie's responsible for half of that $140,000, and Betsy's responsible for the other half. So that increases their basis. All right, and then the partnership borrows $20,000 to finance construction of a parking lot in the front of the building. All right, so that's just another liability. Liability, and just to label it so that we know, we'll call it the parking lot. All right, so they're going to get half of that, so that's going to be $10,000 that their basis will go up. And then what else do we have here? At the end of the year, the accrual basis partnership owes $8,200 in trade accounts payable to various creditors. So this was a brand new company, so that means that we started owing them $0 and it increased to $8,200 because what we do is we look at the change in the liabilities to calculate this. So they went up by $8,200, so we're going to give them each half of that, $4,100 again, and we'll call that increase in trade payables. The partnership reported net income of $30,000 for the year that they share equally. So any kind of net income will increase the basis. So net income. All right, so Connie's proportionate share of net income would be $15,000, and that would be an increase. And Betsy's would also be $15,000. So we'll sum up this and see what we get. So Connie has $299,100, as does Betsy. So let me know if you have any questions.